Chart increasing market sentiment, rebounding amid uncertainty. Following the sharp declines in early April triggered by President Trump's Liberation Day tariffs, major indices like the S&P 500 have rebounded significantly. Investors are increasingly discounting aggressive trade rhetoric, focusing instead on robust corporate earnings and the potential for policy moderation. U.S. China trade talks have resumed, with President Trump citing great progress. This has tempered market reactions, keeping major indexes like the Dow, S&P 500, and Nasdaq within a narrow trading range. Briefcase earnings and economic indicators. Corporate earnings remain a bright spot, with 86% of S&P 500 companies surpassing expectations by an average of 8.2%. The labor market also added 177,000 jobs in April, signaling economic resilience. However, caution prevails as companies issue conservative forward guidance, and potential consumer price hikes loom due to tariffs. Upcoming earnings reports from major firms like Alibaba, Tencent, and Walmart will provide further insights into the economic landscape. Warning recession risks and Federal Reserve stance. Goldman Sachs maintains a 45% probability of a U.S. recession within the next 12 months, primarily due to unresolved trade tensions. JPMorgan is even more pessimistic, estimating a 60% chance of a recession in the second half of 2025. The Federal Reserve has kept interest rates unchanged, citing a mixed economic outlook with solid growth and employment but increased uncertainty due to policy actions, particularly tariffs. Chairman Jerome Powell emphasized a cautious wait-and-see approach, with a higher likelihood of rate cuts in July. Compass investment strategies. Given the current market conditions, investors are advised to maintain a market weight position overall but consider overweighting value and core sectors. Defensive stocks in consumer staples, technology, healthcare, and financial sectors are performing relatively well and offer safer investment options amid volatility. Notably, stocks like Tesla, Palantir, and Nvidia-backed CoreWeave have shown promising technical signals. Tesla's stock climbed due to optimism about robotaxi developments, while Palantir reported strong earnings. Upcoming reports from Alibaba and Tencent will also be closely watched. Global market perspectives. International markets, particularly in China and Mexico, have outperformed U.S. stocks year-to-date, despite global trade tensions. China's Hang Seng Index and Mexico's IPC Index are both up more than 10%, highlighting the potential benefits of diversification into international equities. Outlook summary. The stock market is navigating a complex environment of trade negotiations, economic indicators, and policy uncertainties. While corporate earnings and labor market data provide reasons for optimism, the potential for a recession and the outcome of ongoing trade talks remain significant variables. Investors should stay informed and consider a balanced approach to portfolio management in the coming week.